Yeah, thank you once again for making the time. Like I said, I will be the moderator for today, and it's mainly to guide the discussion, managing a bit of time so we don't go over, and facilitating interactions between, say, the speakers and yourself. But mainly, we'll be focusing on the Q&A for today. And I cannot go further without giving a big thumbs up to Katanga UK. So these sessions are normally run by Katanga UK, but it's not just limited to Katanga UK. As you can see, we've got speakers here who were not in Katanga, and I'm sure there are people on the call who never attended Katanga. So for those who have been on this mission before, that is what we do. We try to make it more practical and applicable to the audience we have in these sessions. So today we're just talking about money being a very key thing. But before I hand over the host, Wisdom, before I hand over the microphone to him, I'd like to introduce the two speakers we've got today. So we've got Daniel Tando, who is the unit head for group business at Enterprise Life. He brings to us today over 15 years of dedicated experience to the insurance industry. He's a results-oriented professional, and he's played a pivotal role in championing innovative group insurance products that have strengthened Enterprise Life's presence in the market. Daniel's key strengths include group insurance solutions, relationship management, and risk management, with skills touching on how it goes about enabling people to build strong partnerships and how to deliver tailored financial protection to diverse groups. His commitment to excellence, innovation, and client-centered service continues to drive his impact in the insurance industry. He didn't quite tell us whether he was a Katangi, but I'll leave that for when he takes the microphone. Our next speaker today is Leonard. Leonard actually attended the University of Cape Coast back in 1997 and is currently an insurance advisor with the Access Financial Services and previously a consultant with MetLife Insurance. I wouldn't want to go beyond your MBA and stuff, but without further ado, Wisdom, I think it's about time I hand over the microphone to you.
Thank you very
for
much.
bearing with my very croaky voice today.
That's all right. I don't think anybody noticed. It's as clear as a gold. So yeah, that's good. Thank you for the introductions as well. And as my colleague Louis said, forgive me, but I might be calling him LA because for years, over 20 years, I've called him LA since. So if I do call him LA, which sounds informal, it's because of the relationship I have with him. Okay, so my name is Wisdom Gasu. I'm the Vice President of Katanga UK, and we put this together for everyone, and hopefully all those who are joined now will benefit, if not even directly, indirectly, because there will be somebody that you know who might benefit from this. So the format of today's presentation is we've got two individuals. One who is Leonard Amoa, who is going to be focusing on personal insurance. And he's based in the UK, so he's predominantly going to focus on UK concepts, but the concepts will apply in all jurisdictions as well. Then following that, he will speak for 10-15 minutes. Following that, we're going to have Daniel Tando, and he will talk about group insurance or alumni insurance that is predominantly done in Ghana. All of us here have affiliations to Ghana, whether it be our secondary school or family relations. So we, from that aspect as well, will benefit from there. He also will speak for 10-15 minutes. And then following that, we will be open to Q&As. And so the Q&As at that point, ask any question at all you have on your mind, and these professionals would try and address the concerns for you. So without much ado, I'll hand over the, the mic. I don't have the mic, but I'll hand over the screen because it's zoomed to Leonard. Leonard, can you please give us a brief of the personal insurance from your perspective and how it's going to benefit everybody? Thank you.
Okay, all right. Thank you very much, Gazu, and all your colleagues here. I'm so grateful for this invitation. So I'm going to give my best what I can do to help your group. So as you said earlier on, I'm based in the UK. So I'm going to talk about the policies here in the UK, but then every policy here also relates to the other countries. And one of my providers, MetLife, is also in the US, so they can understand how these policies work. Access is an intermediary company. We are between the providers and the general public here in UK, and we sell for so many providers, including Aviva, Legal & General, Scottish Widows, Royal London, and so on. And in the insurance industry in UK, some of the providers will not even allow you to get a policy from them. They prefer you to go through an advisor because advisors have been trained to know how to sell these policies to you. Okay, so these are some of the providers I sell for in the UK, and we have similar providers in the US and also in Ghana. So we have here Aviva, Legal & General, Scottish Widows, Royal London, Vitality, and so on. Okay, so these are the policies that I do here in the UK. Life insurance, critical illness cover, income protection, accident protection, private medical insurance, home insurance, and also pension. But with regards to pension, we have another company that do the pension for us. So we don't actually do the pension. And pension, as everyone knows, is worldwide. So it's good, even though you may have the government one, you are also allowed to have a personal insurance, a personal pension scheme, which will really help you, because most of them are not. The pension from the government is not enough. So having your own private pension will really help you. Okay, so let's talk about the personal policies. The first one is life. I'll talk about life insurance last one. So let's start from the home insurance. Here in the UK, once you have your house or you rent in a place, we have home insurance. And the home insurance, we have building insurance, content, and then landlord insurance. Now, if you're a tenant in someone's property, then you are supposed to have a content insurance. But what happens is that the landlord will have their own building insurance. So as a tenant with a content insurance, in case there's a fire outbreak in your house or thieves should break into your house, then it covers so many things, then your content insurance will take care of that. If you have your own property, as any other country in the US also, then you must have your building insurance. Now, in case there's a fire outbreak, I mean, most of the houses here, people bought them on mortgage. So if you've not finished paying the property and there's a fire outbreak, how are you going to rebuild this house? So it is always important to have a building insurance. And this building insurance is very important to the mortgage providers in the sense that every year they will write to you to remind you that your building insurance is coming to an end. And if you don't renew it, they will have a big issue with you. So building insurance is very important. We also have landlord insurance. If you have a property and you are renting it out, then you can have your own landlord insurance. Sometimes when tenants leave your property, they can create a mess in the house. So your landlord insurance will take care of that. And some landlord insurance even take care of your tenants not paying their rent. So once you have properties you are renting out, it is always good to have a landlord insurance. Now let's move to private medical insurance. In any other country, we have this private medical insurance. They have it in Ghana, even though Ghana, we have the NHIS. We also have private medical insurance. If you don't want to go through the national one. In the US, they have it. And I think in the US, almost everybody has a private medical insurance. Because if you don't have insurance in the UK, I mean, it's not easy for you. And here in UK too, even though we have NHS, we still have private medical insurance. So if you don't want to follow the NHS long queue, now those of us in the UK know that the NHS is having big issues. So if you don't want to follow their long queue, because sometimes you may be appointed for, like, you may have an appointment for just blood tests, and it will take about 2 weeks or even a month if you have a surgery. But if you have your private medical insurance, the moment, you know, your GP tells you they have to do this, you have to do that, your private medical insurance will take care of that. But one thing we have to understand is that private medical insurance takes care of acute conditions here in the UK. I don't really know how it happens in the US, but in the UK, it takes care of acute conditions, not chronic conditions. So if you have something like diabetes, your private medical insurance will not take care of that. So that is how it works here. And when we are writing it, we write it in 2 ways. We have one that we do full medical disclosure, and then we have another one, we call it moratorium. Now, if you do a full medical disclosure, any existing condition that you disclose, you cannot make a claim on it ever again. So people go with that one. Then we have the moratorium. With the moratorium, you don't give any disclosure, but at a point of claim, they will find out whether that was an existing condition or something that had just come. Now, if you write the policy today, within the last 5 years, any existing condition that you were having after today, if that condition doesn't show up in the next 2 years, then after 2 years, you can make a claim on that. So if, for instance, 2 years ago, you had a backache, and then you do the private medical insurance today, if in the next 2 years, you don't have any issue on the backache, if the backache should show up after 2 years, you can make a claim on that. So that is how the private medical insurance works in the UK. And I believe they do so in other countries too. As I said, it really helps, because if you're going to follow the NHS long queue or the government one, I mean, you may be waiting for about 3 months, one year, and so on. So it is always good to have your own private medical insurance. Now, here in the UK, we have another policy we call accident protection. Now, this policy is about injuries and then hospital stays. Now, the provider who does this policy in the UK is also in the US. I mean, it's an American company. We call it MetLife. So it's a main company in the US, and they have a branch in Europe. So they do this policy. They call it Everyday Protect. Now, this policy is about injuries. When you get injury, they give you money for the injury. And when you are admitted in the UK hospital, the day that you spend once you discharge, you can make a claim on that. And for example, just this year, one of my clients has received £17,000 just staying in the hospital bed. And this same man, 2 years ago, he was admitted and was given £9,600. Just about 2 weeks ago, one of my clients, I had to go and fill her form for her. She was also admitted, and she's going to be paid $2,500. Almost every 2 weeks, I get an email, my client has been paid. So there's an important policy for those of us in the UK. It is a policy that we don't ask you any medical question, and you can easily make a claim on that. It will cover you and your children. It will run until you are 75 years. The next one is income protection. Now, income protection is to protect your income. Most of us self-employed or working with a company or the government institution. Now, some companies have sick pay at work. So when you are sick, you are not working, your employers will pay you. Majority of people do not have any sick pay at work. So you ask yourself, if you are sick, you are not working, how are you going to take care of your family? How are you going to pay your rent? How are you going to feed your children? Now, this is where income protection comes in. So income protection will give you monthly income if you are sick or you had an accident and you are not working. The insurance will pay you every month until you are back to work. Here in the UK, we have 2 main types of income protection. We have what we call full income protection, and then we have budget income protection. Every income protection will end at your retirement age or at your retirement. Now, with the full income protection, when you are sick and they are paying you, it does not have any limit. So if you are sick for a year, 2 years, 10 years, or even if you don't recover, the insurance will pay you either to your retirement age or till you recover. So that is how we have the full income protection. Then we have the budget. We have 1 year budget, 2 year budget, or 5 year budget. If you did the 1 year budget, when they are paying you, anytime they are paying you, if you've not recovered, They will pay you for a maximum of 1 year. But that doesn't end the policy. The policy will end at your retirement. But for that period, they only pay you for a year. If you did a 2-year budget, the same thing. If you are sick, they are paying you and you've not recovered, they will pay you a maximum of 2 years. So that is how income protection works. Sometimes people ask, how much are they going to pay you? They're going to give you at least 65% to 70% of your gross. They will not pay you exactly how much your employers are paying you. But if they pay you, employers are paying, then you won't go back to work. So they will limit it so that you can recover and go back to work. So that is income protection. Then we have critical illness cover. Now, with the critical illness cover, it's a policy for yourself. In case you are diagnosed of a critical illness like stroke, cancer, kidney failure, liver failure, and so on, then they give you the money. Now, it covers a long list of conditions. So it's a good policy. Some providers write this policy until you are 70 years. Others, like here in the UK, Scottish Widows or Guardian, they take it up to 70 years. Aviva, Legal & General, and others take it to 75. Royal London and LV, they take it all the way to 80 years. So if you have this policy, for instance, this morning I did it for a Reverend Minister, and it's running until he's 80 years. Now, along the line, if he should be diagnosed with a critical illness, they give the money, it ends the policy. Now, when you do the critical illness cover also, it comes with life insurance. So more or less, it's like a 2-in-1 policy. So if you die, they'll give the money to your family, it ends the policy. If you had a condition, they give the money to you, then it also ends the policy. So that is how that policy works. Then the last one is life insurance. So with life insurance, I have this here. With the life insurance, we have 2 main types. We have the whole of life, then we have the term assurance. Now, when we say whole of life, that one is an indefinite policy. It will be running until the person drops. So even if you are 100 years, that policy is waiting for you. And usually we do that one for people who are 50 and over. And under the whole of life, we have 2 main types. One, we do medical disclosure, and then the other one, we don't do any medical disclosure. The one we don't do medical disclosure is what we call over 50s life cover. This one is designed for people with medical conditions. So someone who has stroke, cancer, or kidney failure, or someone who has had HIV, that is what I do for them. So we don't ask you any medical disclosure. So it's a bit expensive. And then we have the term assurance. So we have whole of life, then we have term assurance. The term assurance means you are doing the policy for a term. So the term could be 10 years, 20 years, 40 years, or 50 years. So whichever term you choose, if the person dies within that term, then they pay the money. If the term is up, the policy is gone and you don't get anything back. So we have short term, which is between 60 to 75. Then we have long term, which is between 80 to 90. So if, for instance, if you go to the banks or post office here in the UK to write a policy, usually they will write a short-term policy up to 60, 65, or 75. Now, if, for instance, your policy is up to 75, what it means is that if you die before 75, then they'll pay the money to your family. But if 75 you are alive, the policy is gone. You don't get anything back. So you may have to start all over again. So that is where the problem usually comes. When you want to start a new policy after 70 years. Number one, you are now 70, so your premium is going to be high when you are starting that policy. Number two, if at that time you've developed some medical condition, either the medical condition is going to increase your premium, or it can even prevent you from getting a new policy. So usually I advise people to have a long-term policy. So the long-term you can do up to 80, 82, 85, or 90 years. So you either do up to 90 or the whole of life, or up to 75. And usually with a short term, it doesn't mean it's not a good policy. But if you are doing life insurance to protect your mortgage, then you can do short-term policy because you have to do it for the duration of the mortgage. Now, what we use life insurance for in the UK, and I think everywhere, we use life insurance for 3 main purposes. Number one is to leave inheritance for your family. So you pass away, they give the money to your family. The next one, because if you don't do that, I mean, your family will find themselves wanting. So it's good everybody will have a policy to leave something for them. Number two, you can use life insurance to protect your mortgage. If you buy a house in the UK, and I believe in the US, the same thing, you are owing the mortgage provider. they want you to have a policy in place to protect the mortgage. In case you should pass away, then the insurance comes in and pay off the outstanding bill. Before I had a client who passed away after doing their policy for 8 months, the man had cancer and the man passed away. So they paid the money to pay off the outstanding bill. The wife got almost £600,000 and they used that one to pay off the debt on the mortgage. So you can use that one to protect your mortgage. And the last one is, here in the UK, some people use life insurance to pay inheritance tax. I mean, those of us in the UK will remember that early this year, the government introduced another tax for the farmers, another inheritance tax. Now, this tax, they tax it on your properties. So what some people do is that if your property is huge and your debt is going to be huge, what they normally do, they can take up a life insurance policy that when they pass away, then the family can use the money to pay the tax on the property. And a few months ago, I was listening to the news and I was listening to this farmer. I felt so sad for the man because he said, I wanted to take life insurance policy to pay this inheritance tax, but no provider is going to give me a policy because I have heart problem. So I was even telling my wife, this is the issue this man is going to have. He cannot have a life insurance policy, the one which is big enough to pay the tax. The one I can do for such a person is the over 50s life cover, but that is not enough because with the age, with the amount that you can do, it's not enough to pay the tax on the property. So that's how the life insurance works here in the UK. Now, I'm going to talk about why claims are not paid. And this is worldwide, here in the UK and even in the US. Because sometimes some of you have policies, but you may think, I have a policy, so I don't need any policy. Trust me, most people's policies will not be paid out. It's not just having a policy. There's one thing having a policy, and another is if it will be paid. So some people's policies are not paid because it was done wrongly. And I've never heard anyone who says my policy was not paid and the person has gone to the court and they've won. Because you give the issue to your lawyer looks at it and says, no, you don't have a case. So the first one is disclosure, poor disclosure. So number one, you have travel disclosure. The last time you traveled to Africa, how long were you there? So you have to put all these in your in the application. So if, for instance, you are doing critical illness cover with Legal and General, and you say that in the next 2 years you are going to travel for about 3 months in Africa, they won't give it to you. So if you disclose, if you say no, and it happened that you were in, let's say, Ghana for 3 months and you had a condition, they will not pay because you did a wrong disclosure there. You have resident disclosure. How long have you lived in the UK or in the US? I had a client whose wife had cancer and they didn't pay because when they went to Scottish Widows, they got her medical report and it showed that the woman came to the country 2018 and she did the policy in 2019. Now, at that time, Scottish Widows, you were supposed to have been here for at least 5 years before you qualify for their policy, and because of that, they didn't pay. We have job disclosure. You have lifestyle disclosure. That is your weight and your height. And then we come to the medical disclosure. This is where most people don't get paid because they have some issue, they didn't disclose it. A few years ago, I was on the radio and a woman called me. The husband had stroke, they didn't pay because he failed to disclose that his blood pressure has gone up before. And just the blood pressure, and I told her that with Legal and General, they have two questions on blood pressure. They'll ask you during the last 5 years, are you taking medication for your blood pressure? And that one was no. But then the next one was that during the last 5 years, have you been told that your blood pressure is up? And that was supposed to be yes, and he took no. So he had cancer and they didn't pay. He had stroke. I have so many of them. The other one was wrong policies. Some people are claiming from something that they've not done because most of the time they don't even know what they've done. So you have to know what you've done before you can make a claim on that. I think I'm almost there. And then the last one, then when you have a policy in the UK, you are supposed to put the policy into trust. So trust is like a will. That is where you indicate which people should get the money. The first advantage of trust is that payments are made as soon as possible. When the person dies, once the policy is in trust, they make the payment. The next one is that the government cannot tax the money. Once you put your policy into trust, the government cannot tax it. And then the last one is that those whose names are on the trust, they will get the money. So if Daddy Lumba has set up everything in order, we wouldn't be having this Odo Bruni and Akufo Addo fight in Ghana now, if everything has been set up. So as men and as wives, parents, you must make sure that any policy that you do, you put it into trust so that people will know who should get what. And I think I'm going to end here because of the time. If there's any question there, I can come in. Thank you very much.
Well, thank you, Leonard. There are no questions in the chat at the moment, but I find it very interesting. And I'm not sure whether some people want to raise their hands and ask their questions sort of in real time. But I mean, it's such a shame that people are losing out on claims, for one thing or the other. All these list of reasons you cited, there was a bit of an eye opener.
Yeah.
And to think that the critical illness, what I found really, really refreshing to notice that the critical illness bit you touched on actually counts with the income protection. So you probably don't need to go for a lesser one if you have a bigger overarching protection that covers the next. So do you want to say anything to that?
Yeah, we have the critical illness as a policy on its own, and then we have the income protection. Now, the difference is that critical illness will pay a lump sum. If, let's say, the person had stroke, it will pay a lump sum of, let's say, 40,000 based on the amount that you did. They pay that money, then it ends the policy. But income protection pays you monthly. That is the difference. And critical illness has to be a critical illness, like stroke or cancer or kidney failure. But with the income protection, you can even claim on backache. Once you are not working and you are staying home, they will pay you every month. That is how the two work.
Oh, thank you for that.
I think
Thank you.
there's a hand up, Kofi Kwanzaa.
Yes.
Okay.
Yeah, Kofi, you have the floor now.
Yeah, thank you very much. Actually, I want to ask a question about the health insurance, life insurance, because I really want to create a life insurance for my family in Ghana. So I really need more information because we have I want to insure all the family. So how do I go about it?
Okay, so are you in the UK or you're in Ghana?
I'm in the Netherlands.
Oh, okay. I think the guy, our next advisor coming to talk, he's going to do that because I know I learned he works with the enterprise, and even after this, I'm going to talk to him because I have clients here who would like to have policies for their parents back home, and I know Enterprise is the only company that does that in Ghana. Just yesterday, I gave a client's number to one of my of my friends who used to work with the enterprise. So that policy of enterprise is really good because I can testify. I've got two clients who have made a claim. One of them, she did the policy for the mother-in-law, and last year the mother-in-law died, and they paid. Let me use the old currency. The new currency, I don't get it. It said she got 600 million. I don't know how they say it in the new Ghana cities. So they got 600 million. Is it 600,000? Something like that. And then another client too, the mom died and they paid them. So the enterprise policy is good. I think our next advisor is going to do that. So if you link up with him, he's going to help you sort that for your family back home in Ghana.
Thank you, Leonard. Thank you for introducing more or less, bringing it in. I think the plan was to have both speakers come in, speak, and then afterwards we'll have an open question for both of them. So at this point, I would allow Daniel to have the floor. Daniel Tando, please, over to you.
All right, good evening to you, and thank you so much for having me this evening. I know you are all busy men, but you've taken time out of your busy schedules to represent and also listen to us. So for context purposes, I'm doing more group policies. And for group policies, I'm told that I should, narrow into alumni policy because one way or the other, we all belong to an alumni group back home. So just to situate my presentation, so we all know that apart from our family of orientation, where we all come from. As soon as we get to school, we also form some kind of family. That is a secondary family where even after school, we feel that responsibility towards one another. When you hear that a member is either bereaved or a member is critically ill or permanently disabled or something, we all feel that kind of responsibility to chip in some funds to be able to assist our colleague who is in that situation. So this is the reason why we came up with the alumni by enterprise policy, where we are saying that based on our research, there are three main perils that frequently happen for members in these alumni groups to, start donating funds to support a brother or sister who is in that particular situation. So what enterprise did was that we came up with a solution named Alumni by Enterprise. And I must say that we are the pioneers of alumni solutions in Ghana, and all the other competitors have copied us one way or the other. So, you are in the right hands, and I'll do justice to it by explaining to details. I'm sure by the time we are done, you'll be able to also explain to your colleagues and also convince them to enroll into our Alumni by Enterprise. So what we did with our Alumni by Enterprise, that we conducted a research and realized that these three main perils that I'm about to mention are the key. So sorry, Wisdom, can I project?
Yes, you can project. Go ahead.
Please, can you see my screen?
Not yet. It's just building its way
It's just
through.
loading up now. Yeah, we can see your screen now.
All right, okay. So the Alumni by Enterprise Live did research back in 2016, where we identified three main perils that we are all confronted with as a group. So one is death, not only the member, but the member's spouse, as well as the children of the member, and also the dependents of the member. Now, we are also mindful of the kind of words that we use, because when it comes to insurance, we have to be very critical about the kind of definitions that you give to the policy. So we are saying two outdoor dependents. So the policy covers for death, it covers the member, the spouse, two children, and also two outdoor dependents. We know that some members have already lost their parents, and it will be so unfair to them that signing on to this alumni policy, they will now have the opportunity to bring on board these two outdoor dependents. So for the Alumni by Enterprise Life, we did not limit it to only biological parents, but we are saying that any two outdoor dependents of your choice, and it could be a guardian, a foster mother, foster father, an elder sibling, an auntie, an uncle, etc. But if they fall within our age bracket, and I'll come to that shortly. Now, we are also covering each member under what we call the critical illness cover, which I believe my colleague, the first speaker, has done justice to that, and I'll explain further as well. And we're also covering members under the total permanent disability cover. So this alumni policy covers three main perils: one, death; two, critical illness; and three is total permanent disability. Now, for the death cover, it extends to cover the spouse of the member, the children, two children of the member, and two outdoor dependents. However, when it comes to the critical illness and the total permanent disability cover, it only covers the member. It only covers the member. And for the avoidance of any ambiguity, I'll be explaining this covers. So for the death cover, so when we say death cover in insurance, it means the permanentization of life, where the person is no more, and we have to fulfill our promise to that person. It could be the member who is no more, so benefits will be paid to the beneficiary of the member or the next of kin of the member. And also if it is the member's dependents who have passed on, then obviously the benefit will be paid to the member as the claimant. Now, when it comes to the critical illness cover, we are saying that these are the dreaded diseases that we know of. So in Ghana, we will say that the big diseases, like the cardiovascular diseases, the burns, the paralysis, the tumors, the cancers, the kidney issues, the major organ transplant. But for the avoidance of any ambiguity, we have a tall list of illnesses that we cover under our critical illness cover. So for that one will also be furnished by the group if the group so wishes to know all the critical illness covers prior to commencement of the policy. But even in that vein, when we sign up the contracts, in the contract we have this illness listed in that contract as well. And also when it comes to the total permanent disability, this is also payable when the member becomes permanently disabled or unable to work in any of the occupation he or she reasonably would have done, given his experience, education, or training, because of an injury or illness. And also, let me also put on record that these covers, the death cover, the critical illness cover, the total permanent disability cover, they are standalone benefits. They are not accelerated. So when I say they are standalone benefit, it means that each cover stands alone, and the benefits allotted to that particular cover is a standalone benefit, unlike other policies where it will be accelerated. So given that, for instance, if the death benefit is 100,000, the critical illness is 50,000, the total permanent is 20,000, which means that if you should suffer any critical illness and is paid, the 50,000 is paid, it is deducted from the death cover of the 100. So it means that when something happens to you, the member, you are no more entitled to the 100,000, but now you're entitled to the 50,000. But that is not how the alumni policy is designed. These are standalone benefits. So all the benefit that has been allotted each peril is a standalone benefit, and a member can benefit from all these three perils in a particular year. I had a case, I think last 2 years, where a member suffered, I think stage 4 cancer. No, he suffered stage 1 cancer, and the critical illness benefit was paid along the way. He was trying to get cured, and it degenerated to another issue and became bedridden. And in that case, he became total permanent disabled now. So the person is unable to go to work based on his experience. So that total permanent benefit was also paid. And we're there one afternoon. The president of the group called that the final event, that is a death cover. It means that the person has passed on. So we have to also pay the death benefit as well. So in that particular year, that individual benefited from all these covers. So the critical illness cover now returned to permanent disability cover, and now the final event, that is death, also occurred, and we have to pay as well. So these are our age ranges when it comes to the alumni by enterprise. So the main life should be between 18 to 65 years. The spouse, the same, 18 to 65 years. The extended family is from 18 to 85 years. And for the children, we have no age limit for the children as well. And also, when it comes to the parent and parenting laws, we are also looking at from 31 to 85 years as well. That is at inception. So it means that even if your mom is 84 years today, you can cover her, and she will be on the policy till, the good Lord calls her as well. And let me also state on record that these ages, that the maximum ages, they are age next birthday. So the 85 years should be next birthday, age next birthday. It shouldn't be, for instance, this year, your mom is 85, so she doesn't qualify. She's above 85 years. So what we technically mean by this maximum age is that the person's next birthday should be 85 or 65 years. Now, we have various packages for the alumni policy. We have the bronze, we have the silver, we have the gold, we have the platinum, we have the diamond, and we have the prestige. Each package selected comes in a sum assured with a total sum assured. So, for example, when we go in for the prestige package, it comes with a total sum assured of 150,000 Ghana cedi, where the member is insured for 30,000 Ghana cedi. The spouse will also be insured for 30,000 Ghana cedi. The 2 children will also be insured for 15,000 cedis each. The 2 adult dependents will also be insured for 15,000 Ghana cedi. And also, when it comes to the critical illness cover for the member, it's also 15,000 Ghana cedi. And the total permanent disability cover is also 15,000 Ghana cedi. And for that one, if you should sum all these benefits, sum up to 150,000 Ghana cedi, and it comes with a corresponding premium of 912 Ghana cedis per annum. So a lot of people think that this is a monthly premium, but I always say that no, this is an annual premium. The 912 Ghana cedi is an annual premium for each member in a group. Now, when we move on to the diamond package, where it gives a total sum assured of 125,000 Ghana cedi, where the member is insured for 25,000 Ghana cedi, the spouse is 25,000, the children is 12,500 cedis each, the two nominated life or the two adult dependents is also 12,500 each. The critical illness cover for the member is 12,500. The total permanent disability cover for the member is also 12,500. And it comes to the corresponding premium of 768 Ghana cedis. So it goes on and on to the least package, that is the bronze package, which gives a total sum assured of 25,000 Ghana cedi, where the member is covered under death for 5,000. The spouse is also covered under death for 5,000. The children is 2,500 cedis each. The two nominated life or the two adult dependent is also 2,500. Critical illness cover for the member is 2,500, and the total permanent disability cover for the member is also 2,500. And if you should divide, you should sum up all these benefits, sum up to 25,000, and it comes to the corresponding premium of 180 Ghana cedis per annum. What it means that if you should divide this 180 Ghana cedi by 12, it means that the monthly premium is 15 Ghana cedis. 15 Ghana cedis in Ghana cannot even buy Malta Guinness anymore. So you could see that we are really thinking about clients and also making sure that this solution, members can afford the premium, so that together they all benefit from this wonderful product. So now let's move on to the features of this very policy. So there's no territorial limit when it comes to this very policy, but the group to be insured should be a resident in Ghana, or should be a registered group in Ghana. Registered, not necessarily going to the registrar general to register the group, but the group to be insured should be a group known in Ghana. For example, we all went to our secondary school, so you could be an APSU, you could be LOSA, you could be an Odadia, you could be the Opoku Warriors, you can name them. But the group should be known in Ghana and should be a resident group. But for members, there are no territorial limits for members. Now, there's no waiting period as well. So what it means is that if the policy should commence today and tomorrow, a member suffers any of the perils that we are covering, the member qualifies for the full sum assured. There is no waiting period. However, late joiners will go through a 3 months waiting period. So members that will sit on the fence and join at a later date will have to go through a 3 months waiting period. And the sum assured ranges from a 2,500 Ghana cedi minimum and a maximum of 30,000 Ghana cedi. And this is an annual renewable policy. So we wanted to reduce the default rate. So we made this policy an annual renewable policy so that we can curb default, where in Ghana, particular people refuse to pay their premium, and when there's any claim, they quickly offset their arrears and want to benefit from insurance. We've realized that, but when it comes to group policy, we want to make it as easily accessible as possible, where all members will see the real benefit of insurance. So we made it an annual renewable policy where members will only pay a premium for a particular year, and it will be renewed in that same period in the subsequent year. And also there's a 10% escalation rate where at renewal, if the group wants to increase their benefits by a percentage, there's always this 10% flat escalation rate where it affects the premium as well as the benefits. Because of inflation in Ghana, we always have to make sure that we are giving real value to our clients. There's also a complementary benefit as well. So we also have a sister company named Transition. So we are saying that all benefit that will accrue and the claimant wants to convert his or her benefit to services from Transition, we are going to give a 10% discount to all services that you subscribe with Transition. So for Transition, it's a funeral home. So it takes care of, from cradle to grave. Anything about funeral, we call them the funeral people. They are experts in that field. as soon as touch with your mom or whoever you've covered passes, or you just alert them. They quickly go to the hospital, pick up the body, and keep in our morgue. You can do beautification. You can do. We have a church hall there. You can do that. We have a place for refreshments. We have a hearse. We do everything, actually, basically everything. So if you subscribe to that service and you are an alumni member, we give you 10% discount. And also, how to get started. It's an easy process. So we just do what we call data collection, and this is an automatic underwriting because we know the parameters at which members have to, include their dependents, so their age limits and all. It's automatic underwriting. We issue you with a debit note, you make payments, and we issue with a contract. As I explained earlier, the contract comes with every little details you can think of. Every little details. And we also include a benefit schedule where all members who have been insured under the group, their names and their respective dependents and their respective benefits will be indicated in that schedule. And a copy of that contract will be kept by the leader of that group. The leader of that group will be in custody of that contract. And anytime there's any of these perils that we've insured materializes, they'll just refer to the person's details, process the claim, and the benefit will be paid in less than 7 working days. In fact, our turnaround time is 5 working days, but normally in Ghana, there are some bank delays and all. So I always tell my clients, maximum 7 working days, you should receive your claim. And for our claims process, we've made it as easy as possible, where at the comfort of wherever you are, you just complete an online claim form. You just upload the necessary documents pertaining to the peril that has materialized. Then, as soon as you submit, we start counting. Then from that time to, the turnaround period, 7 working days, you should receive your benefits in your authorized account that you give to us. Also, when it comes to the debt documents or the documents that you can attach, when it's related to debt, we take into consideration that the fraud level in Ghana has become something unthinkable. Every 10 claims that you pick, you are sure that 4 of them are fraudulent claims. So normally we would have taken any supporting debt documents, but now we are more critical that if you should bring a mortuary receipt, it's fine with us. But if you should bring an obituary alone, it should come with either a burial permit or any other debt document, because now the obituary poster has become something so easy to acquire, where you just go to a graphic designer, you just instruct the person, do this, and that is done. So now the obituary is no more worthy document that we hold in high esteem to even process a claim. If you bring that obituary, it should be attached to any other debt document that you have. Apart from that, if you have a medical cause of death, it can be a standalone document. If you have a death certificate, it can be a standalone document. If you have an order of service, it can come with the obituary or the burial permit. But any other debt documents that you have available, we always consider that. But please remember that our turnaround time is 7 working days. So on this note, I'll pause for questions. And also, we also have our frequently asked questions here as well, where colleague members can always read and get the response. Thank you.
Yeah, thank you so much, Dan. That was so insightful and very interesting. Certainly, I picked so many tips that I don't even want to list it, but the one that got me cracking was what we call the ways and means. In terms of this obituary stuff that you mentioned, Ghana, just be rest assured someone is going to pull something quite dicey. But yeah, it's very enlightening. I picked up on this next birthday criteria you mentioned. And of course, we do have just the one question in the chat. But before I give that to Leonard, I believe, because that came quite a while ago from Martin. He wants to know what the worldwide cover for folks who work abroad is. But actually, Leonard, before I give you the microphone, I would just have to mention to Daniel Tay, who is also on the call, that it will be taken over from me because I have to shoot off to a football training for the kids. Okay, so yeah, Leonard, if you want to take that question, and then maybe I'll leave that to Gasu and Daniel to take it from here.
Thank you very much, Louis. Thank you very much for what you've done. You've made this run smoothly. But yeah, so the question was in the chat, isn't it? So it's saying, please what about a worldwide cover for folks who work abroad? So this particularly going to Leonard. Leonard, do we have a worldwide cover for individuals who are not domiciled in the UK but maybe want to take a UK policy?
Okay, the UK policies here are designed for UK residents only. But then if you take up a policy, once you're a resident here, if you take up a policy, it doesn't mean you cannot travel. You can do your up and down as we all travel all the time. But if at a point in time you decide to leave the UK, you are not coming back. That one it will determine where you are going. If you are going to live in Europe, the US, Canada, Australia, New Zealand, they will cover you. But if you are going to a place like Africa, the Caribbean, Russia, Thailand, or Ukraine, they will not cover you. So if you are not in the UK, you can't have a UK policy. You must be a resident here. I think I've answered that.
Thank you. Thank you. Martin, does that answer your question? I hope it does. Yeah, he's giving a thumbs up. Okay. Oh, I think somebody gave a thumbs up to that question. Yeah. So I think with Danny's presentation as well, I think what excited me was the fact that you don't have to disclose any medical conditions for either yourself, the policy holder, or any of the dependents, whether it be your adult dependent, your spouse, or your child, which is very, very good. But I'll leave the floor open to anybody else who wants to ask a question. Please raise your hands. I'll invite you to ask a question, or you can type your question if you choose.
All right, so just to add a bit about our Quintuple policy, if that is allowed.
Yeah, go ahead.
Yeah, so we have a policy for Ghanaians living abroad, and it's known as a Quintuple policy. That is what Leonard attested to. So all Ghanaians living abroad, we have a policy that you can sign up to cover, loved ones in Ghana, so that when something happens, you need not to bring down pounds to cover the expenses. But because you sign on to this Quintuple policy, we do the payout here, and they will be able to give your loved one a befitting burial. So I learned some members interested in. I'll take your details, give it to the Quintuple team. They'll call and explain into details what our Quintuple policy entails, and the benefit you stand to also gain as well.
Thank you. Some people are asking for your contact details, Leonard and Daniel. Can you type your phone numbers and your email into the text so that some
Sure.
people can save it and reach out to you at a later time?
Sure.
Have we got any more questions?
Yes. Gasson and Daniel. Anybody hearing me?
Loud and clear.
Yes.
Okay.
Please.
So Poloaxi. So this is from Martin. Obviously, we've got a policy running with you.
Yeah.
I need to be clear, because I think coming up to our renewal, we may have a parallel policy for people who are now joining, obviously with parents ages much younger than 85, because a lot of us, we've got our parents well beyond the 85 mark. So one, what size of group, because as you can tell, Katanga is a big organization. Mobilizing is becoming slightly difficult, but we are nevertheless a big organization. So it's possible that at some point in time, we may even have 5 different groups under the same Katanga banner running. Hopefully that's not a problem. Then secondly, what's the number that we need? What's the critical number? Is it still 25? Is it more? And obviously that doesn't affect any existing policy that I'm part of. Is that correct?
Yeah, you are right. It doesn't affect any policy that you are on, especially when it comes to a group policy. It doesn't affect it in any way. So the
Right.
minimum number required is 20.
Okay.
20. Yeah, 20. Yeah.
Right. Right. So it will still be the same 65 and 85. But I see the benefits have changed a bit. So that would only apply to the new people, correct?
So no, it has to apply to the entire group. So with the alumni
Wow.
policy, we want it to be uniform. So if the group settles on 150K benefit for, corresponding premium for 912, it must cut across all members. We don't want a situation where in a particular group members have picked different benefits, and when there's a claim, we always have to go and refer which benefit were you. And there could also be communication gap where some members migrate from one benefit to the other, and when there's that gap, it brings.
Well, that shouldn't be. Okay. Okay. The migration, I can see where you are coming from. If, for example, I'm already part of policy 1 and we have policy 2, yes, I can see where we will discuss that in some final details. But let's think about this situation where we've got younger generations obviously coming through. I refer to people who've just graduated this year in the last 5 years. They want a policy. We are trying to encourage them to get on the ladder, and then they form a group of 20. Now, you are saying that you want their benefits to be the same as ours? Is that what you're saying?
No. We will treat them as a separate group. So far as them,
That's exactly what I'm trying to get to.
So far as they meet the minimum number, we treat them as a separate group.
Exactly. So then their benefits will be different, and then their premium will be different.
Yes.
Correct. But what you are suggesting is that you don't want any cross-pollination of me leaving to join the new one and so on and so forth. Is that correct?
Yes, you are right.
Okay. All right, that's understandable.
So I've seen 2 hands out. Samuel Amwa, can you unmute yourself?
Okay. So the only question I'm asking is, I know there's a standing insurance policy that some of us are already on. So are you having a different policy? Is this a different one? Yes, I know I've missed a lot, but I want just that clarification. Is this a totally new, different policy from the one that we are on? And so, because I heard the last speaker asking the question that, so if he's to migrate from policy 1 to policy 2, the nuances and all that. So I just want to understand, is it that this is a different new policy that if you are already on the policy 1, you can still jump onto this policy?
So Samuel Amwa,
Yeah.
are you saying you're already on the Katanga alumni policy?
Yeah, I'm only on
Yes.
policy.
So I would help Samuel. Samuel is one of our boys.
Okay.
So Samuel, yes, the answer is correct. Because we have been on the policy for the last 3-4 years.
Yeah.
And you need to go on a new one. The time, the year, the year of the beneficiaries is very likely going to chop you there. Because if you take me, for example, by the time I was joining, my mother was 85, she's 88 now. So I don't qualify under any other group at this point if we start another Katanga group. So there's no way you would go, you would qualify. But even more importantly,
because I share similar things with you.
Because we've made some claims under one bracket, Enterprise's view is that transferring will make it messy. And almost everybody will be transferring, even if they haven't made a claim, they'll be trying to transfer to go and slot into a group with better benefits, so to speak. So they are not quite warming up to that idea. So I think that's where we are, if we have.
Okay.
Now, of course, Daniel, whilst you are there, something that just crossed my mind. Is it possible for what we call a fellow or a Katangi to be in 2 groups under the Katanga banner?
No. So
No.
we are encouraging members to also bring on board their SS group. So for instance, someone is an old Tom, someone is an Odadie, but they don't have this very policy that we are sharing today, even though we are on Katanga policy. But when it comes to our SHH groups, we do not have it. We are encouraging every member to introduce this alumni policy to their SHH group so that we can also sign them on. And when signing them on, it doesn't also ban you from joining that SHH group. No, you can still be on that SHH group so far as your dependent meet the maximum age at entry. Thank you.
So I
All right.
suppose
So sorry,
what
Martin.
I suppose what I hear you say. Sorry, is it Daniel on?
No, yeah, Martin, go ahead.
Okay, so what's here? I suppose what I hear you saying is that when we have 3 groups under Katanga, I can only join one.
Yes,
But
please.
if I can form another one under Chimota or under Infantipim, I can join
Yes.
that. And if I can find a group under Ghana Institution of Surveyors, I can also join that. So I could
Oh,
be in
yes.
3 different groups. Is that
Oh,
correct?
yes. Yes, please. You are very right.
Okay.
Yes. And
Okay.
Martin, just to clarify, I think irrespective of your age, if you are now coming to join the new what's it called, Katanga policy, if we are going to create a new Katanga policy at all, you have to be below 65 years. That's the criteria. When it comes to
That's correct.
when it comes to the dependents have to be below 85 years. But
That's
they
also
don't
correct.
they
Yes,
don't
that's
need
right.
to be your parents. They can be
Yeah.
That's
anybody
correct.
else. So
Yeah.
if you want to join the new policy, you still can join if you are below 65 years. You just have to nominate people who might not necessarily be your parents directly, but anybody who you think it's a dependent or you want to assign the
Yes,
dependency
but
criteria.
you can't join, Gaston. You can't join if you're already part of the existing group.
No, you
under
cannot.
Katanga.
If you're already part of the new group, you cannot join.
Correct. Correct.
Yes.
Correct.
Okay, thank you. Nanotu had his hand up. Sorry, I've kept you waiting. Nanotu, can you ask your question?
Yes, it saddens me that Martin will not be able to get a new policy because of the 65 bar, but let's leave that for another day. Oluwazi, please,
Yes, sir.
what makes enterprise more competitive and better? Because we've seen, or at least I have seen, a lot of other quotes out there, sometimes by brokers who are supposedly working for enterprise, and it doesn't really make sense how a broker would be able to get a better deal than the organization itself. So I guess for me, my main question is, how competitive is enterprise? Because I think in another group that I am on, they're looking at Old Mutual or something. So convince me that enterprise is better than anybody out there.
All right. Thank you so much. So I would say that when it comes to the insurance space, Enterprise Life is the leader. And as I alluded to the fact that we pioneered this alumni policy in Ghana first. A lot of competitors have copied us, but the experience that we do have, they do not have even a quarter of it at all. And also when it comes to our financial muscles, we are top notch because we generate the highest premium income in Ghana. And when it comes to our claim payments, I'm sure I will not blow my own trumpet. I mean, people will testify about how swift our claim payment is. And for our competitors, what I would say to them is that they are undercutting the premiums in order to get a business. But believe you me, in a year's time, they will revise the premium to reflect the actual, premium they wanted to quote initially. It's a strategy of undercutting premium and getting the business. When they see that the claims experience, they will just quickly revise the premium to shoot up. And you have nothing to do at that point because they've already gotten you on board. So when it comes to enterprise, we are not perturbed when it comes to our competitors undercutting because we have gathered some experience that they do not have currently because we have run this alumni policy since 2018 and they came on board around 2019, 2020, thereabouts. And what we have gathered so far, I think they do not have that experience. And a lot of people will testify that when it comes to claims payment, when it comes to the alumni policy, it's very swift because we have the financial muscles to do so. And we pay and we also pay on time. So that is what I would say to that. And enterprise is the leader and everybody is looking at us. I have colleagues from other competitive companies who will call me every now and then that, Charlie, you guys haven't to launch any product for us to copy because we are always watching the leader. And I told them that please go and do your own.
Are they Unity boys?
Pardon?
Were they in Unity Hall?
So I mean, when you have followers, they always try to undercut you, and I mean, it's allowed in this industry. It's allowed, but what I will assure you is that you are with the best company who has a financial muscle to pay, even when there are 10 claims in a particular month. Please be rest assured that all individual claims will be paid and paid on time. Thank you.
Thank you,
But
Danny. I've got a
Waxy,
question.
Waxy, sorry, Garson, Waxy, let me follow on from what our president just asked you, because this is a topical issue. Now, have you thought about this situation of creeping exchange rates? When we started, it was 7.71 in 2022 or whatever it was. And then it went up to 14, and then people just couldn't be bothered because at that point, the claim amount or whatever you call it, the benefits, was not was the word attractive. It was not attractive. The premiums were going up because obviously you are pitching it up to reflect changes, as you've said, to reflect market changes, but you are not paying anything more than where you started from. Is it not possible that there's some dollar link between premiums that we pay you and how much you pay out? Have you guys discovered it? If you say you're a market leader, this should be a ready answer for me, correct?
And just to follow, hold on, Danny, just to follow on, under what circumstances are the premiums increased? Because you were saying that some of the other competitors might, in an intent to lure people in, lower their premiums, but at a later time, increase their premiums. We have also experienced our premium going up. Is that the same tactics that is being used? What is the criteria for increasing premiums?
Okay, all right. So thank you very much. So with regards to the first question, I think your suggestion is worth considering, and I'll bring it to bear in the next revision of this alumni policy, because we are a listening company, and if we should even look at some features that we've introduced into the new one, we realize that there's escalation of benefit as well as premium in there. But I think we've not averted our minds to, linking it to the exchange rate, which I think is something worth considering. So thank you for that, and I'll relay this information to the product development team so that they can consider that in the review. Now, with regards to the second question, so we look at the total book of the alumni policy with regards to the group. So for every year, you realize that we do what we call claims ratio. So for the claims ratio, realize that, for instance, Katanga, you paid a premium of, let's say, 80,000, but you've benefited about 120,000 Ghana cedi. Now, what it tells us is that if you don't adjust the premium, because at every renewal, members age by one as well as their dependents. And we cannot say that there is a term policy where you get to a point where you have to go off the policy because of the age. This is not a term policy. So what we have to do is that to adjust the premium slightly every year so that we can make room and also make reserve in order to pay claims in the nearby future. I don't know whether this answer is okay. Answers your question.
Yeah, it's fine. It's fine. Just wanted to understand what the criteria was, what is taken into consideration when premiums are being increased.
But I'm sure in the coming days, we are considering also trying to lock up the premium for a number of years before we revise it. Not
Oluwaseyi, are you aware that a time will come from your last explanation where
Martin, we've lost you.
1,000 back?
Hello?
Martin, we lost you. Can you repeat your question, please?
Right. So I'm asking Waxy whether he's aware that it is possible, it's just a remote possibility, but it is still possible that a time will come where my premium might be 10,000 cedis, and my only benefit, if any of the perils happen or eventuate, will also be 10,000.
Martin, I can tell you on authority that is not going to happen, because
it's not going to happen. Eh?
Yes, we are looking at just the benefit for the member. We are looking at the total sum assured.
Ah, okay.
Yes, we are looking at the total
Okay.
sum assured that we are promising you. So
Okay.
in a
Right.
particular year, a member, God forbid, can lose both dependents, can lose a wife. I mean, it can happen. It's also a possibility. But we are assuring you that when it happens, so far as it's a covered event, be rest assured that all these individual payments will be made. And that is our promise to you.
So Daniel, I've got a follow-up question. So the total sum assured with this policy that we're looking at is 150,000.
Yes, that is the stage.
Yeah, the prestige, yes. So we have in our policy instances where individuals haven't nominated, say, dependents. So technically, they are not fully insured for the whole sum. Would their premium be a sliding scale of what they are insured on, or would you encourage them to nominate somebody or to nominate somebody as whether it be children or dependents, or would you just leave it as it is? Because what we've realized is that those individuals who have been nominated dependents have seemingly lost out. What is your advice on that?
All right, thank you so much. I would advise that members who did not include their adult dependents should please do so because they are losing out. So you see, this just like a buffet. You going for a buffet is £10. Whether you take a snack or you take just ice cream or you take you still pay the £10. So I always advise each and every member to make full use to explore all the avenues by adding your two dependents, by including a child if you so wish, or you have a child.
Wow.
Please make sure you exhaust your slots so that at least you get a full benefit of the insurance, because I don't think anybody can convince me that in his or a family there's no adult dependent there, or there's no adult person in his or her life that he can put on cover so that touch something happens, you'll be able to chip in some funds to give that person a befitting burial. Sometimes, I'm also sure that some members do not have the full complement of the policy, so they thought it's just insuring themselves and their spouse. But some, at a later date, they always come down. Oh, so we have the opportunity to include two adult. Then the slot is still there for them to include those two adult dependents. Thank you.
Thank you. I think I'm wary of time, and I've got some online questions. So let me go through them quickly. One is asking, my alumni group encourage all members to sign up for the enterprise alumni policy, but I was unable to sign up. Will the 3 months period or will the 3 months wait period apply to me as I plan to sign up next year, 2026? That's
Yes,
one
please. So what I would say to that you shouldn't wait till the renewal time. You can always join the policy midway, because of the waiting period, so that at least you can cover your 3 months waiting period and get a full benefits. As normally what we do is that we will just prorate the premium to meet the renewal date of the group. We will just prorate. You not pay the full premium. We will just prorate it to meet the renewal date of the group. So, for instance, if you are left with about 5 months to go for the renewal date of the group, we will just give you the 5-month premium so that you pay and you meet the renewal date of the group, so that you can renew with all the entire group, so that you can at least cover your 3 months waiting period. You shouldn't wait to renewal before you join the policy. You can always join midway. Thank you.
Thank you.
But Polowati, as I understand it, if he waits and he joins after the group's renewal policy, there's no waiting period.
Yes.
Because we are always signing up new people to join.
Yes. So when the person waits to the renewal date, there's no
Yes.
waiting period. But how sure are we that from that time to the renewal period, nothing will happen?
Yes,
Well,
but also he's sitting down and he's thinking, well, it's left with 3 months. For example, where are we now? We are the dying embers of November, and then we hit December. Then we've
Yep.
got just 3 months before we renew, which is end of March.
March.
So he might start thinking, look, you know what? If anything happens between January and March, I'm not covered anyway. So what's the point? Why don't I just wait and do it? Do you see where I'm coming from?
Yeah, I do. So when it's 3 months to the period, then yes, it makes sense. But when I
Okay.
mean it's about 6 months, 7 months, then I think
I'm with
just
you.
have to- yes.
I'm with you. I'm with you. I know that Gasson is wrapping up, but Mr. Amwa, is there no benefit for Katanga UK? Is there nothing that we can benefit from just our numerical strength in Katanga UK?
What you can benefit, because we don't do group policies. Group policies are
Okay.
meant for employers and employee. So for
Right.
you in the UK, your best is to having individual policies.
Okay. Okay.
Mr. Amwa, talking
Yeah.
about what's it called, organizations. So if we are a legally registered organization, can we benefit?
I mean, with the good policies like private medical insurance or income protection, they've designed it for employer-employee relationship.
Okay.
So as a group like that, I'm yet to get a policy for you. But for now, what I know is you can have your individual ones.
Okay, thank you. There's
We
another
will
question
contact you
online.
privately.
Okay.
Yeah, so Mr. Amwa has shared his contact details in the chat, so you can get that. Somebody has asked about critical illnesses. I think both Danny and Leonard mentioned that there's a list of critical illnesses. So if your proposal is not on the list, then that doesn't fall in. Someone was also asking, can we split, can the Katanga group be split into year groups like year 2000, 2001? Surely it can going forward.
Oh,
But the
yes.
point is, if you do split it, you might not get the numbers. And what's the point?
All right.
We have one running, so you can join in, or you can have a group for the, if you don't want to join the one that's already there, there's the new, you can join, you can form a group and join the new policy. That's my proposal for that one. I think that's correct. Can
But
you
it should
Yeah.
meet the minimum number of 20.
Yeah, you should
Yes.
meet the minimum number of 20. That's correct. Can you okay, no, someone is asking, can you back your assertion with data? I'm sure the data is there. We can back it. Someone is also asking, assuming math. Okay. Yeah. And then another
No, please.
so someone is
That's all.
asking,
I
yes.
think you have to ask that question because it's very critical, you know.
Okay, I'll ask it. I'll ask it.
Is-
Don't worry.
Okay.
Someone is asking that can you have a husband and wife joint policy? That's to Mr. Amwa.
Okay. Joint policies are usually done when you want to buy. You using it to protect your mortgage, because joint policies are paid once. When the first person dies, they pay their money, it ends the policy. So usually, when you buy a mortgage and you want to protect the mortgage, then you are advised to have a joint policy. So whichever goes first, then the insurance comes in and pay off the outstanding debt. So I give an example that before COVID, I had done a policy for a couple. And 8 months down the line, the man passed away, and the insurance came in and paid off the outstanding debt. So that is how we do joint policy. I know some people have done joint policies, number one, based on love, and number two, out of ignorance. Because ideally, if you are not using your policy to protect a debt or mortgage, then you don't need joint policy. Well, when they pay once, it ends the policy. So your children are going to lose. But if you have your individual policies, when let's say the woman passes away, they pay the money. When the man also passes away later, they pay the money. That is how joint policies should be done to protect your mortgage.
Thank
I hope
you.
I've answered the question.
Leonard, I have one more question. So I'm on what's it called? A termed policy as we speak.
Yeah.
There's a disadvantage that has what's it called? A roof. I can't go beyond a certain age. Is it easy to transfer it or extend the term from 75 to 90 or unlimited?
Okay. If when you do a policy, there's something we call guaranteed insurability. Most policies, have that one, where if your policy is, let's say, up to 70, you can move it forward. But it has to be done based on two conditions. But apart from that, if you have maybe a policy of 75, then you may have to do a new policy. The only way you can extend your policy, number one, if let's say you've bought a house, you bought a mortgage, and you tell your policy provider that I bought a house, so I want to extend the cover to protect my house, then they can do that. They will use the guaranteed insurability. Or if you have a child, you've got, let's say, your pension baby, and you want to extend the term on the policy, because of that one, they will do it for you. But apart from these two, if you want to do a long-term policy, then you may have to start a new policy altogether.
Thank you. Nanotu, you had your hand up. Do you want to ask your question?
Yes, that goes to Polowaxi, but I think there's a critical question about whether erectile dysfunction is a critical illness. I think fellows would want to know that, because it's critical to some people, but that's another one. Polowaxi, in the
Yes.
matter of your onboarding process,
Yes,
I know you
please.
answered the question of somebody who had put an application in but had not put details.
Yeah.
I'm thinking the onboarding process is not the most friendly. And perhaps if we can, I don't know if you set that Google Forms thing up or we did, but if possible, for instance, we can have logic in there where if somebody hasn't put information in each field, it shouldn't allow the person to proceed. I know, of course, your interest is just getting the premium. But for us as well, when the claims come and we realize that they haven't done stuff, it becomes problematic. So I don't know how you can help us where at the onboarding stage, if anybody puts in, sometimes we have data where somebody has put in that they were born in 1875 or whatever. And it's just what it is. So the data comes and we now have to clean it up and call them and verify. I was thinking that you should be able to clean that up for us, at least on entry. So we don't have that much, because we're just doing
Oh,
this
yes,
to us.
yes. So for our jot form, we can make it a mandatory field where if the member doesn't complete that field, he can never submit the form.
Yeah, I think we should do that.
Okay.
So
If
that
it's a
like
general
date of birth.
consensus in the house, then I can quickly do that for Katanga, because for some group they will also say that they don't know the age or date of birth of their dependents, and that shouldn't delay the cover. They'll just put in the names and later on they submit the date of birth, just to make way for the policy to go through, so that they don't overdelay the entire group.
Okay, that's perfectly fine. I think my concern is not so much about the date of birth as it is about names or fields being left completely blank.
Okay.
So if
Yeah.
you put your mother's name but you don't know date of birth, at least there should be a mother's name there. That one you should definitely know.
Sure.
But we have had the incidents where somebody paid and didn't put anything at all except for his name. And then in the end, when there appeared to be a possible claim, he came up to us to say, well, but you didn't put anything in the form. So we are learning from the process and trying to make sure that we are better able to serve Katangese. And I think, yes, I
Okay.
take your point. If at least you can make sure that every name field is completed. So if you don't have a wife and you want to put your side chick, at least you put something in there. Well, I know boys. So if you can do that with a logic for us, I think that will be helpful and it will help. Date of
Okay.
birth, fine. If you are comfortable with dispensing with requiring a date of birth at the point of registration, that's fine. But at least then there's a name in there.
All right. So I'll make the name a mandatory field. So if you don't complete, you can proceed.
Thank you very much. So all names of all beneficiaries should be mandatory.
Yes.
If you don't put date of birth, that's fine. That can come later on. But
Yeah.
then again, now you say come later on. Come later on, how do they do that? They come to us to inform you, or they get direct access to the form? Because I don't think everybody has their own independent login to your portal.
No. So normally they have to come through the administrators.
Administrators, any paid staff. So
And you see, if we don't engage the administrators, it will be so difficult for us.
Okay, I
Because
do
the number
understand.
of calls that will trickle in, we might not be able to handle it. That is why we always plead with the administrator. They have to coordinate this for us. So
Okay.
normally after every renewal or after every data collection, we normally send the data back to the leadership to confirm the details from their members. Then if they're
Yeah.
able to confirm, then we can proceed to put them on cover. Because
Okay.
for good policy, we are trying to manage it as to the barest minimum in terms of administrative costs and how easy it is and all. That is why we always plead with the administrators that every data we try and send it to you for you to do the necessary confirmations for us before we proceed.
Okay.
So if
We
you are
don't
going to
have a
do it
problem.
individual, it's going to be tough for us. For that one,
Yeah,
I can assure you.
not a
But
problem.
what
We
we
have
want,
20 administrators. So long as the Christmas hampers will come, we are okay.
Sure.
but
Wonderful.
no, to what we also want is that we want to make sure that when you, I think we want, because date of birth is a very tricky thing, and sort of drives this 65 and 85 maximum age limit. Waxy, we think that you must also request for the date of birth. At that point, we can't keep going up and down, because sometimes by the time you finish, we find out that information is missing. You don't tell us, we don't tell you, then we start fighting. So that's also important. But
Okay.
also, if I just add this point, also we want the administrators to be able to go there, click a button, and have only information for Nano to texting. Because we don't want to be sending that. You just mentioned that you send us everything to check. But I want to be able to click a button that I can just have only information for everything entered by Nano to texting and send it to him to confirm that indeed this is what he entered. You know, he has a very nice ram from Bermuda. I want to make sure that he has not drunk on that Bermuda when he was filling the form. So
All right.
make sure that by the time he goes, it's clean, it's nice, and he can confirm it. And we also have a copy to say that he did confirm it.
Okay.
So that is it. And the very last one is that I really get particularly personally pissed off with this Nana text in O2. You need to really clean it up. I don't know how you're going to do that, but his surname is not O2. If we start messing up with people's surnames and that sort of thing, it just doesn't speak well of enterprise at all. And therefore, for
okay.
the administrators as well, we want Tando to be Tando. We don't want this idea of Tando being your middle name and Kweku becomes your surname. I don't know how, whether it is your fault or our fault. Somehow we need to clean that up quickly.
All right, okay, well noted. So from what I gather here, you want us to make the names and date of birth mandatory fields.
Yeah, I think it would help because
All right,
from
okay.
Martin's point, if somebody is 90 years and then they put the name on and then later they pay and then come and tell you that, oh, they are 90, then we get into issues.
All
I
right,
know
okay.
sometimes we try and put these systems because Ghanaians generally just can't be bothered to do these things, but maybe we should just rather be strict,
All
give
right.
people deadlines and tell them that, look, you have to put, so you have your logic in the forms, and if the date is above 85 or whatever on entry, then straight away the person can proceed.
Sure.
It's better for you in the end than
Yeah.
the person paying, thinking that they will get a claim and then later trying to fight with you.
All right, okay. Okay,
You know,
well noted.
and if we can also, as administrators, we've taken on and we are happy to assist you, but if we can also have some access, if even it's just read only, we can't come in and do anything, but we can come there and see the policy, because some people come and say, oh, Kweku Mensah has died, he was my uncle. But then we check our forms and it's not Kweku Mensah, and then we are thinking, okay, has things changed in the interim? Because as you're saying, date of birth could have been communicated to you. So we have to have one source of truth. And, you know, maybe your systems are not ready for that yet, but because the market and the business is growing, if we can get something like that, it would help us, the administrators, to also help you.
Yeah, and I can assure you it's being worked on, and very soon we roll it out.
Wonderful.
Yeah.
Wonderful.
All right, Danny, what's it called? Leonard has shared his email address and his phone number. I noticed you've shared your phone number. Can you share your email address as well? Because some people will want to touch base. I mean, this presentation here is not solely for Katanga. We've got other people from other jurisdictions and other schools and other associations here listening in. So they would be in touch with you guys to follow up from their point of interest. So it's very important that you guys share that information. So yes, we've gotten to a stage where I think we've been here catching up to 2 hours, 15 minutes away from 2 hours. Have you guys got any more question? If not, then I would look to call this meeting to an end. I'm looking at the text messages. I can't see anything come through.
Last question. Is Lloyd on WhatsApp? I tried to send him a message, but
You mean Leonard?
sorry, Leonard, yes.
Yeah, Leonard is on WhatsApp, yes.
Is it for general issue or just for the side chicks?
For general issue. He hasn't got no
Okay.
side chick.
All right. Just asking, you know.
Yeah.
Well,
good.
I mean, if you take up a life policy, the beneficiaries, you decide who should get what. So any name that you want to put there, you decide. You can have your side checks. So that is why when you are doing trust, for instance, you have trustees. Now, if you think if you put your wife there as a trustee and she's not going to give anything to you, then you can have one of your friends to be another trustee, and then you tell your friend all your all your, what do you call,
Side chicks.
the searches and the contraband goods, yeah, all your contraband goods. You tell your friend that Kwesi Mensah is another son, Kojo Mensah is another. Because if you think you put their names there and it's going to create a problem, you can just let your friend be aware of that.
So I have a question following that. I have a question about the tax aspect. So you're saying if we put it in a trustee, or sorry, in a trust, then
In a trust, yeah.
then we avoid paying tax. So now, are you now saying now when it sits in a trust, that trust then is proportionate to the different what's it called, beneficiaries in that trust, and so in that case, should there be a need to claim on the benefit or on the policy, the money goes into the trust then disperses it at the proportion that is assigned to the beneficiaries. Is that how that one works? But that then will be tax-free.
Okay, so I'll put it this way. They have a threshold of life insurance where the lump sum will attract an inheritance tax. So at the moment, I think the threshold is £325,000. So if, let's say, you've taken a life policy of 500K and you don't put the policy into trust, any amount above the threshold, so if it is 500K, above the threshold would be £175,000. That 175, the government will tax it 40%. So it's like a whopping £70,000 will go to the government if you don't put your policy into trust. But if your lump sum is, let's say, £100,000, £200,000, that one will not attract any tax. So once the person dies, they will just pay the money to your next of kin. But putting your policy into trust, whether above the threshold or not, or below the threshold, there are other two advantages. So number one, I said, it makes the payment faster. Because here in UK, if somebody passes away, then the government is looking for your estate to tax you. So we have letters of probate. So they are not looking for all your estate before they can release the body or so. But if you put your life insurance into trust, it will not be affected by the letters of probate. So the insurance provider can pay the money as soon as possible because your policy is in trust. And then the next advantage is that those whose names are on the trust, they will get their money. So you were asking, how is it going to be done? I mean, if, for instance, your policy, I believe your wife will be the trustee. So once the person dies, the trustees will come together, inform the insurance provider that Kwesi Mensah has passed away. All they need from you is they need their death certificate, and then they also contact your GP. Now, when they are contacting your GP, they are not interested in what killed you. They are going to get your medical records and then check whether at a point of buying the policy, you were honest with the information. That is why you have to give accurate disclosure. If they check and everything is okay, then they will pay the money to the trustees. So the trustees will set up, let's say, a trust account. Then they will pay the money into it. Then they will not distribute the money to whoever is on the beneficiary or whoever you made the beneficiary. And I'll give you an example. About 3 years ago, I went to see a woman, and the woman, as I was explaining the trust to her, when I went to the house, there was a guy in the house, and she actually told the guy to go up. So when I was explaining it, and she said that this guy, they are 3 siblings. She is not taking care of them. The mom passed away, and I think 2 years later, the husband or the dad took up a policy. The man passed away. And when the policy was not put into trust, so they got a lawyer to help them get the money. In fact, you don't need a lawyer to make a claim. Once you submit your document, they will make the claim for you, they will pay. So when they finished everything, the lawyer said the man's, the first boy, who was 22 then, he said the guy is over 18, so they should pay the money into his account, or they should pay the money to him. So they paid the money to the guy, and which was 165,000 pounds. So according to the woman, she and the elders of the church, the pastor, they were trying to find out how they should use the money for these three guys. So they were thinking of even buying their council flat. Now, by the time they came to their senses, within 1 month, the boy has squandered the money, 165,000 pounds. He used the money for this cryptocurrency, and everything is gone. Now, because the man did not put the policy into trust, they will pay to your next of kin. But if the policy was in trust, I believe this man, if you have a son who's a fool, you should know that your son is a fool. So if he has put the policy into trust, he would have gotten maybe some 2 or 3 friends to become the trustees. They would have taken care of the money for these 3 children. Now, because the policy was not in trust, the money is gone. So these are some of the reasons why you are advised to have a policy into trust. If your children are below 18, then you can have trustees who are above 18 to take care. And when your children become 18, you can also update your trust form. So it's always good you put your policy into trust.
Thank you very much. Thank you. Is there any more questions? I think that brings us to the end of the meeting. It was initially scheduled for an hour, but because of the interest and the fact that a lot of questions were coming in, we've extended and we are almost 7 minutes away from 2 hours. I would extend my sincere gratitude to the guest speakers, Leonard Amoah and Daniel Tando. Thank you ever so much for bringing us this insight and this information that a lot of us didn't know about. I thank all of you also who've come in to listen as well. Hopefully you've gained something, and even if you are not yet in any of these policies, you might consider joining one or creating one yourself. Thank you very much. I would end here and hopefully advise you all again if we have another presentation coming up in the future. Otherwise, you all have a good night. Thank you. Bye-bye.
Someone has asked a question about the trust.
Okay.
The trust is free. You don't have to pay anything for the trust. It's free.
Thank you. I nearly missed that. So yeah, the trust is free. You don't have to pay anything for it. And like I said, Leonard and Daniel have shared their contact number. You can reach out to me if you want additional information, or you can reach out directly to them as well. That too is fine. So thank you all for coming. Good night.
Thank you too, Gerson, for
Thank you for inviting me.
putting it together and pushing it through.
Good night.
Good night.
Ben Murai. O petadin, o petadin. O petadin.